Hello guys, thanks for attending. This is just going to be a quick overview of standard deviations paired up with Power 3 and just explanations going over Power 3 and some of like quarterly theory like AMDX. This is going to be a pretty short class, so just pay attention and take notes. So here we have our Power 3. It consists of an accumulation range, manipulation range, and distribution range. There's another one which I will cover in a bit, but for now I'll go over just these three since they're the most important to pay attention to. A power 3 occurs in every candle, and this strategy I show focuses mainly on the daily power 3, but it can work on the 4-hour, the daily, weekly, and monthly, and even yearly power 3. Usually around the opening of the candle range, which for us is going to be the daily open in this example. Accumulation will occur, and this is part of the power 3 where price does not have a direction. Liquidity is usually built up around the highs and lows, and it happens after a power 3 or AMDX cycle is finished or when price is between two conflicting draws on liquidity. Next is going to be a manipulation range, which is when price will displace out of the accumulation range and seek some sort of liquidity, whether it be for value gap, order block, or to sweep a high. Distribution is what happens after manipulation is finished and will typically go towards another draw on liquidity. Expansion is not very important, but it's part of the power 3, and it is called AMDX. It is just what happens after a power 3 move, and it will either continue the distribution move or start retracing / reversing. Next, we're going to talk about the standard deviation projection, which we'll use to measure the manipulation, distribution, and expansion ranges. The -1 to -1.5 is what I call the reaccumulation zone, which is where price will typically retrace or reaccumulate. I like to look for some sort of internal liquidity here in the zone, like a fair value gap, to know if this zone will affect price. You can look for entries towards the expansion zones in this zone. The first expansion zone is presented in the -2 to -2.5 range. This is where price will typically want to start reversing after manipulation is finished. However, if it is closed through with the candle body closed, we can anticipate the next zone to deliver. -3.5 to -5 is going to be our max expansion zone, and this should be the absolute cap of a manipulation / distribution move. There are some criteria that must be found in manipulation / distribution reversals. A high time frame PD array like a fair value gap or an order block, and an SMT divergence. You can also look for a market structure shift to confirm or a change in state of delivery. To measure the manipulation range, we must look at the accumulation range first. In the accumulation range, you want to project your standard deviation, in this example, from the lowest swing low to the most recent swing high in the most discernible accumulation range. This is how we measure the manipulation range. The faint lines represent where price will go if price decides to close above the first expansion zone into max expansion. Next, to measure our distribution phase, we must look at the manipulation. In the manipulation, you want to mark out the true manipulation leg, which is similar to the accumulation leg, whereas you will mark out from the highest swing high to the most recent swing low. This will measure your distribution phase price. In the distribution phase, you may expect that when price hits the -2 or -2 to -2.5 range, it may reverse and enter the expansion phase. It may reverse or retrace and continue to displace in what direction the distribution phase is already going. Now let's get into some examples of this in the real market. This is a weekly AMDX or a power 3 example here. As you can see, there is an accumulation range, manipulation, and distribution. We marked out our first standard deviation from the highest high to the most recent swing low that received a market structure shift or change of character. Price tapped into the bullish fair value gap with SMT and tapped -2 to -2.5 first expansion zone and started distributing. Now we can mark out the standard deviation to measure the distribution. As you can see, it hits the -2 to -2.5 zone with a daily bearish for value gap. During the distribution, it starts to enter the expansion phases, where in this case, it started reversing. This is going to be a daily example, and as usual, you will find your accumulation range and mark out the standard deviation from the highest swing high to the most recent swing low that received a structure break to measure our manipulation. It is manipulated into a 4-hour fair value gap and started distribution. We will mark out our second standard deviation to measure the distribution, and as you can see, after price finished distributing, it reversed at the -2 to -2.5 zones, and then it continued to deliver higher until it finishes the cycle. So that's basically everything that I have to go over considering the AMDX or the power of 3. So if you guys have any questions, you're free to ask. Make sure you ask in the chat. You mark it out depending on whether it's a bearish leg or a bullish leg. Like if it's a bullish AMD, you would mark it out from the left to the right, and if it's a bearish AMD, you mark it out from the right to the left. And -3 is not a valid level of reversal. -3.5 is a bare minimum for max expansion. Javier, you had a question. So these levels are simply just to measure the manipulation and the distribution ranges, but people have different fib settings because they trade like different types of like AMD, I guess. Like some people don't even trade AMD with the standard deviations. They just use it for like levels. So these are the best settings if you want to trade the AMDX, the power of 3. High time frame power 3 candle do you look at? So I usually look at the daily candle. I will not look any lower, like at the 4-hour candle or even the 1-hour candle. And it's a little confusing to know what time frame you're going to execute on. Like usually I execute like even down to the 15-second time frame, like, or you can execute even on the 5-minute time frame or the 15-minute. There's not really a set time frame alignment that you can use to trade this, so just make sure you're executing on a lower time frame candle. Is there any difference between high time frame power 3? I'm not too sure what that is. A new high time frame power 3. I mean, they're all the same power of 3. It just depends on the expansion zone or if like manipulation decides to just continue manipulating. It's like there isn't really, I don't have an answer for that. I can show an example. Yeah, I'll show you an example after everyone's done with their questions. If your projections end up in a zone that just had accumulation and no clear hunting for PD raise, what's your next move? Wait for internal structure. End up in a zone that just had accumulation. I'm not sure what you mean by that. Yeah, yeah, I answered your question. I'll show you after everyone is done with their questions over here. No, oh, like no PD arrays. Yeah, if there's no PD arrays, then I just won't trade, because external narrative matters a lot with standard deviation, which is I'm going to explain a lot of that in future classes. Like you need a high time frame PD array in order to trade the manipulation or even the distribution legs. Any more questions, guys? Depends. I only mark out one leg if I only plan to trade like once that day. But I'll also trade like, for example, the distribution leg in order to like catch the expansion range. Stacking power threes. Oh, like using lower time frame power threes. Okay. So this basically just means that let's say you're trading like a daily AMD, but you also pair that up with like the weekly AMD. Like you'll mark out your standard deviations on the weekly AMD and then use that to get narrative for the daily power 3 that you're trading on. So you can anticipate that if you're in like the expansion zone, the first expansion zone of a weekly AMD, and when you're trading the daily AMD, you're going to be looking to like either short or long based on the weekly one. I don't know if that's clear enough, but it basically just hands you like a narrative. Like I can show you an example after everyone's done with their questions. I never used that concept, but like it's pretty useful if you want to have like extra narrative just to be absolutely sure of your trades. And no, I only mark out one leg if like I'm only looking to trade one side. I'm pretty sure I already answered that question. Is there any more questions, guys? All right. If everyone is done, um, I'll leave a link to the slideshow, and I'll have a video up on my YouTube channel for the first mentorship call if you guys need the VOD. So that'll be the end of this call for today. I'll see you guys next Sunday. Peace.